London, like any major financial centre, is increasingly being targeted by terrorist organisations to launder money. A recent assessment by the serious organised crime agency SOCA places the scale of money laundering affecting the UK in the region of £15 billion per annum. One of the city's most respected banks, Winsleau International, is still under investigation due to its involvement in the now infamous Candisi case.
He was appealing as a client because we knew that he was from a respected family.
In the wake of the credit crunch, it highlighted how vulnerable these large corporations are at a time when the launderer becomes ever more desperate and sophisticated.
I mean, it makes a mockery of how tight the management of these companies believe their systems and controls are.
Early estimates indicate that the laundered sum was in the region of $145 million in only 7 years.
There were a large number of trades, and we could see they were trading mostly with us, sometimes intraday.
But how was this allowed to happen? Why did no one at the bank ever report anything suspicious?
And they were also placing fixed-term money market deposits when they could have got better rates elsewhere.
And ultimately, who is responsible?
Why should we worry? They kept coming back for more.
Yet despite these ambitious trading patterns, beyond the income of the hotels and property sales, no suspicious reports were filed.
One of the things that normally would have alerted me was any unusual movements of funds or in unusual currencies, but this didn't appear to be happening regularly.
Oceanic Leisure further sought to confuse the audit trail for the illegally obtained funds by setting up 2 direct subsidiaries and a number of offshore companies from Bermuda through to the Cayman Islands.
It was decided that there wasn't any need for any retrospective or ongoing checks on Oceanic Leisure because they were so very well known to us. And anyway, they became a public company.
This enabled Libertad to use the non-governmental organisations as fronts for their own subversive activities, allowing them unrestricted access to clean funds.
It can be embarrassing, or it is embarrassing, to confront a respected and established client.
Why in the early stages was the rapid growth in the portfolio and the sales of the property not checked in relation to the excess cash available for trading? Why did no one question why a hotel chain had such an active account with high volume when that was not the nature of the business?
You can't go checking to the nth degree. You'd lose all your clients. You have to use commercial judgment.
This case was allowed to happen because either nobody double-checked and made a suspicious report, or, even worse, they all relied on Mr. Somebody else to do it, but he never did. In my opinion, he's got a lot to answer for.